Welcome learners. This week we will learn a very important head of income, that is profits and gains of business and profession. It is known as PGBP. The meaning of business and profession have been defined in the Income Tax Act. The term business has been defined in section 2 subsection 13, and which include any trade, commerce or manufacture or any adventure or concern in the nature of trade, commerce or manufacture. While the term profession has not been defined in the Act, but it means an occupation requiring some degree of learning. The term profession includes vocation as well, as defined in section 2 subsection 36. Like a painter, a sculptor, an author, a chartered accountant or auditor, a lawyer, a doctor, an architect, or even an astrologer are the persons who can be said to be carrying on a profession but not the business. However, it is not material whether a person is carrying a business or profession or vocation, since for the purpose of assessment, profits or income of all these sources are treated for tax alike. Besides necessarily means a continuous exercise of activity, nevertheless, profits from a single venture in the nature of trade may also be treated as business. Now, the term profits, when we talk about in profits and gains of business and profession, the profits includes any income earned in cash or in kind, capital receipts, or it may be in voluntary receipts, its application of the gains in the trade, whether it is immaterial, and the Income Tax Act also does not consider about the legality or illegality of the income. Even income earned from illegal business is subject to tax, and income from distinct businesses are also taxed in separately, and ultimately we get the computation of profits. In case of method of accounting, there is a tax accounting standard and ICDS, that stands for Income Disclosure and Tax Accounting Standards. Section 28 of the Income Tax Act discusses the income chargeable under this head, and it includes income from business, profession or vocation, any compensation or any other payment due to or received by the SSC, income from specific services performed for its members by trade, professional or business, incentives received or receivable by the SSC carrying on export businesses, like profits on import entitlement, cash assistance against exports under any scheme of Government of India, customs duty or excise duty repaid or repayable as a duty drawback scheme, profits on transfer of duty entitlement passbook scheme or duty free replenishment certificate. All these are taken as business income, and value of any benefit or perquisite or any sum due to or received by a partner of a firm which is chargeable under this head, any sum received under keyman insurance policy, sum received on account of capital asset referred to under section 35 AD, or any sum whether received or receivable in cash or in kind under an agreement. Now, while discussing the income from business or profession, there is a term called speculative business. So, speculative business means a transaction in which a contract for the purchases or sales of any commodity, including stock and shares, is periodically or ultimately settled otherwise than by actual delivery or transfer of the commodity or script. So such transactions are known as speculative transactions. Transactions not deemed to speculative transactions include hedging contract in respect of raw materials or merchandise, hedging contracts in respect of stock and shares, forward contract, trading in derivatives, trading in commodity derivatives, etc. Now let us see the computation of income from business. Section 29 deals in a computation of income from business or profession, while section 30 to 37 deals with admissible deductions. Section 40 deals with inadmissible deductions. Section 40A deals with expenses or payments not deductible on certain circumstances. Section 41 deals with profits chargeable to tax, and there are certain other provisions. Now section 30 to section 37 deals with admissible deductions, like section 30 deals with rent, rates, repairs, insurance for buildings. Section 31 repairs and insurance of machinery, plant and furniture. Section 32 deals with depreciation. Section 32AD deals with manufacturing industries set up in notified backward areas of specified states that are eligible for a deduction at the rate of 15% of the actual cost of new plant and machinery acquired and installed during the previous year. Before we go for other sections, section 32 needs to be elaborately discussed. Section 32 deals with depreciation. Now there are certain conditions for claiming depreciation. Depreciation is a very important deduction for income from business or profession. Number one condition says that the asset must be owned by the assessee. If the asset is not owned by the assessee, if it is taken on lease or some other agreement, it will not qualify for deduction for depreciation. Then it must be used for the purpose of business or profession. It should be used during the relevant previous year, and depreciation is available on tangible as well as intangible goods. Computation of depreciation is dependent on certain factors, and number one, it is the block of assets. Number two, written down value. Number three, actual cost. Depreciation is available in case of intangible assets according to the straight line method, while in case of other assets it is on the written down value method. What are the block of assets? Block of assets has got different groups. Tangible assets being building, machinery, plant or furniture. Intangible assets being know-how, patents, copyrights, trademarks, licenses, franchises, etc. Income Tax Act provides different depreciation rates for different block of assets. Like building, if it is residential building, the depreciation rate is 5%. If building is used in office or factory, it is 10%. If building is the temporary erection, etc., it is 40%. So it is block 1, block 2, block 3. In case of block 4, furniture including electric fittings, the normal rate is 10%. And in case of plant and machinery, the general rate is 15%. But plant and machinery in case of ocean going ships is 20%. Plant and machinery in case of buses, lorries, etc. Plant and machinery in case of aeroplanes or computers, it is 40%. And the block 9 deals with the intangible assets, where the general depreciation rate is 25%. Then we have to see the computation of written down value. We can take an example of computation of written down value of an asset for the assessment year 2018-19. Step 1, we have to find out the depreciated value of the block on April 1, 2017. Step 2, we have to add the actual cost of the assets which are acquired during the previous year, during that particular year 17-18. And step 3, we have to deduct the money received or receivable in respect of the asset which is sold, discarded, demolished or destroyed during the previous year